Over the next decade, the world's billionaires will execute the largest handover of capital in human history. Trillions of dollars are moving from aging founders to their heirs, carrying an immense burden of responsibility. For the ultra-wealthy, heirs represent a far more unpredictable risk to long-term wealth than global market volatility or a sudden spike in inflation. Following a major liquidity event, like the sale of a multi-generational business, assets often scatter across fragmented financial advisors and disjointed investment plans. Misaligned priorities quickly erode capital that took decades to build. This chart plots a structural solution to that chaos: the family office. In emerging markets like India, the adoption of these dedicated entities has exploded from just 45 in 2018 to nearly 300 today, managing an estimated $30 billion in assets. These billionaires are actively engineering a financial fortress to protect their legacy from internal collapse. The most exclusive model is the single family office. It exists solely to manage one family's wealth and requires at least $100 million in assets just to cover the high operating costs of a dedicated in-house staff. Families seeking institutional scale opt for a multi-family office, which pools resources across several clients. Others use a virtual family office, running a lean operation that relies heavily on integrated tech platforms and outsourced experts. This reallocation chart shows exactly how these entities deploy capital. Capital is draining out of traditional stocks and bonds and flooding into alternative assets. They secure yield through private debt, buy direct real estate, and fund venture capital. Executing this level of complex asset allocation requires a specialized team. They hire top-tier talent from investment banks and accounting firms, operating with the strict discipline and infrastructure of a multinational corporation. Passive inherited wealth is stripped away, replaced by an aggressive institutional-grade apex predator hunting for returns in the private markets. A modern dynasty is rarely confined to one country. Heirs, properties, and operating businesses are scattered across distant urban hubs, creating a complex web of global citizenship. This geographic dispersion creates legal and financial vulnerabilities. Differing estate laws, cross-border taxation, and international regulatory compliance mean that a single asset transfer can trigger a cascade of multi-jurisdictional liabilities. Family offices mitigate these risks by linking global advisory networks through advanced enterprise software. This ensures the family retains a unified, real-time view of their total portfolio, regardless of where individual members live. The family office acts as the centralized, stabilizing nervous system for a highly decentralized, borderless dynasty. Yet, despite all this advanced financial engineering, these organizations harbor a massive blind spot. This report tracks expanding family office services. While they plan for market volatility, data reveals over a third have absolutely no succession plan. Wealth holders carry deep anxieties about the next generation, citing concerns over their heirs' maturity and lack of interest. This creates a brutal paradox. Generating market alpha and perfecting asset allocation are useless exercises if the family members themselves end up at war over control. In the end, pure financial strategy is entirely subordinate to familial stability. Mathematical perfection cannot fix a broken family structure. Ultimately, the modern family office exists to impose strict, unemotional governance over the family itself. They establish formal family councils, write binding conflict resolution protocols, and mandate youth financial education programs. By mimicking the cold efficiency of a corporate board, this architecture actively removes emotional friction and historical grievances from the decision-making process. As trillions of dollars prepare to change hands, navigating this generational handover is a perilous, enduring climb. When trillions of dollars change hands, the family office manages the family's own DNA, engineering the legacy to survive its own human nature.